This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:34 p.m. on December 16th, 2020. Welcome. We have a little nor'easter blizzard going on here. Lots of wind and beautiful snow falling from the heavenly skies. So it's that's the weather report for today. This is our midweek strategic session. These sessions are recorded, uploaded to the Clueless Trading YouTube channel for viewing by others at their own time, their own convenience, and they're also uploaded about 20 to 25 minutes right after we finish directly on the real-time Twitter feed. Click that, listen to it if you want to listen to it earlier than tomorrow. All right, full disclosure, this is purely for financial education, not for any solicitation or advice. We have two great members here, my good friend Dominic and my good friend Mike, and whoever slips in. All right, so one of the things that I'm going to start off with a quick note on the behavioral or investing or trading psychology aspect. Despite some monstrous movers on the market, a whole bunch that we're catching and a whole bunch that we are not catching, because there's a lot of things moving, I can assure you that none of us, or maybe I'm wrong about some other people, but I can assure you, at least I speak for myself, that I'm not happy. And the reason I'm not happy is not because I'm greedy, it's because of the extreme volatility in the market that I've explained thoroughly, that all of us experience on a daily basis, on a weekly basis. And I covered it very well on my last strategic webinar on last Thursday, just a couple of days ago. I suggest that you listen to it. That because of the extreme volatility, of the extreme day trading activity of hedge funds primarily, using very fast computers known as high frequency trading, super fast black boxes. There was a fantastic article on it on the Wall Street Journal, I believe. I think I saved it. I'm going to actually upload it either today or tomorrow. In fact, tomorrow. And it's fascinating how fast it's becoming. They have gone from a millionth of a second, and they're attempting to go billionth of a second right now because of the advanced technology that's coming. And instead of using actual fiber optic cables, they're using some sort of other fancy glass tube that runs signals faster between Chicago, New York, London, you name it. So this activity of hedge funds that we see every single day is what really, and I'm not making excuses because I try to fight it every day, but as humans, you cannot. So because of that, I don't believe that what we should be doing and the amount of profits or ROI, return on investment, on a percentage basis on options that we need to capture, we're not doing it. Yes, we're catching, in the middle, this and that, or sometimes selling out because it doesn't look good and it's only 2 days left for exponential duration. It doesn't matter. It doesn't matter. The fact is that volatility creates havoc. That volatility creates a mental, it basically makes the retail human trader brains mush, makes you feel like complete crap the beginning of the week. And then you do all kinds of silly things. And then you see the same things just rip higher and you wish and you wish and you wish. The could have, should have come into play in a big way. So the only way that we can minimize that and reach some level of peak performance, despite all these amazing precision alerts, both on the swing and the day trading sites that are being delivered every single day for all my great members and free trial subscribers, that you can maximize your potential is to be as mechanical, as robotic as possible. Instead of questioning, oh, why is that stock down? Oh, what happened there? Why is Amazon up 30 and then down 50 and then up 100 from there? What 100? 120 from the 43-point drop from yesterday. Instead of always asking the same old, usual scripted questions in your head or asking me on DM, look at those charts, take the risk. You're not going to be right all the time. But if it's a powerful stock that for literally no reason aside from some asinine European regulators who have been after the butt, and including some very asinine US Congress and senators too, who are always attempting to literally cramp and in some ways destroy our greatest companies that make the United States really great. Technology companies, biotech companies, in this case, technology companies. The European regulator says, oh, we're going to put $1 billion fine. You think Jeff Bezos cares about $1 billion fine by to pay some of this nutty European regulators who think that they are just, that these companies are just pure monopolies, and then our own senators and great congressmen, both parties, bunch of morons, if you ask me. And I've said this before. Think, oh, antitrust, let's break them up. Break them up. Their values will be unlocked, and those are the companies which they'll spin off as separate companies. Let's say in the case of Facebook, Instagram, in the case of Amazon and Amazon Web Services, maybe SpaceX. No, sorry, what's their one called? SpaceX is Tesla. Amazon's one is called. Jeez, it's just slipping my mind. Their space division. So let them break them up. So it just makes me sick, okay? Because those are what communists do. That's what hardcore socialists do. Capitalist countries don't do that. In fact, China, believe it or not, is the most capitalist because they encourage their companies to grow, if you want to look at it on a neutral basis. They don't go after their companies as much as we do. All right, next topic. Let's stick to trading. But you know my feelings about this matter. Business should be left to run business. That's what America is great for. That's where capitalist societies have thrived and communistic and socialist societies have died. Russia was a complete communist society, and it's the most ruthless capitalist society ever. And if you know Russians, you know how ruthless they are when it comes to capitalism. Some of them will sell their grandmas for, at auction. Oops, don't mind me saying that. So bottom line is that we need to, so despite all that, companies are doing great. So coming back to trading, this intense volatility and people getting completely whiplashed in their head. After all, we're human, right? We have a brain. It's called fear, fight, or flight. Okay? And most of the fear is false evidence appearing real. It's fact. It's a fact. Algorithmic high-frequency trading programmers constantly moving around prices to make it seem like, ooh, something's really going on bad. In most cases, no. No. And that's the reason why you have $150 turnarounds on companies like Amazon and the $100 plus, $110 plus turnarounds in Shopify, just to name a few. But those were the extreme examples. Okay, so what I suggest, the only way we can control it, and believe me, you're not supposed to feel good in this business. You're not. You're supposed to be always in a constant state of positive stress. On days that you feel the crappiest is the days that you need to cut down your emotional, sheepish, whatever it is, complete terror, fear in your head, that part of your brain, and then look very, very mechanically at those same charts and take risk. If you got a call that's gone from $7 to $1, well, that's a loss. So why not buy a couple at $1? And when that chart turns, you can sell it at frigging $20. And it happens. And it happened today. And it's happened before. It's not like a scripted guarantee that it's going to happen. But hey, if you're going to lose, if you got, let's say, 4 options that you paid $7, $28, and now they're $1, that's pretty much gone. Okay, so eat it, because in between losses and gains, there's enough winners. So maybe you bought another 4 or 2, and then that turns around and you sell it at ripping higher, You sell it at, let's say, 10, and then you see it go to 30. That's what happened today. So the only way that you can control that, oh my God, it's all over kind of mentality on a particular trade is to become completely mechanical and robotic, which is very hard to do. Very hard to do. Real money's at play. Mechanical and robotic, especially on days of extreme volatility. Especially on days of extreme volatility, all real traders and fake traders, all right? Let's say fake and real. Let's make it real, okay? Traders need to practice total discipline, total robotic, non-emotional behavior as much as they can. And we have the capability of doing that, but it doesn't come in one day. It's just like, a mental discipline that might, and it's a change of habit, change of mental habit, behavioral habit that might take months, that might take years. It's okay, but keep practicing it. And you will see the difference it makes to your overall trading and how calm you stay during days of massive volatility. And of course, doesn't matter if it's a good, bad, or fugly day. Okay? I am always working on your behalf. Respect that. Respect the charts that are being produced, constantly keeping you guys informed on a intraday basis, and even sometimes after hours, and of course these webinars, so that you guys are not lost like babes in the woods, like walking around saying, I don't know why this happened. There's always a reason why something happens, and I explain them very, very clearly. So please practice mental discipline. That's all I gotta say. I ain't Tony Robbins and I ain't Oprah, okay, or Dr. Phil, but I'm just telling you what a trader needs to do. Get mentally really robotically tough instead of squealing, because this is the only business that's going to make grown women cry in the middle of the day. Literally cry in the middle of the day. Exactly. So respect that. Let's move on. So the volatility is not gone away, and the volatility is going to come back and happens every single day. So the key is false evidence appearing real. So a couple of important points here, as I covered through. The Federal Reserve came through like they literally always have. Great man, great patriot, Powell. And if President-elect Biden does get fully officially ratified as our next president in January, then he's going to have a partner to work with, Janet Yellen, as our Treasury Secretary. What a great! Please, somebody please mute their mic. A lot of feedback coming, please. So, and Janet Yellen and Powell together can work very, very well because they think alike, they're pro-growth, they're smart people. So that combination from a Wall Street fiscal investment perspective is fantastic. It's fantastic. Thank God that Yellen was nominated as Treasury Secretary instead of some very left-wing progressive liberal economist or somebody who wants to radically change the ways true capitalism works. And capitalism is not a walk in the park. It's capitalism is actually ruthless, right? It's survival of the fittest. So basically, they are good. They understand how markets work. They are both Federal Reserve chairman. One is the next chairman, Janet Yellen, and Ma Baker, like we call her. Ma Baker is back in town if Biden gets done. And I love Mnuchin. He's great. He also understood the markets and how things work. Okay, so saying all that, today's Fed meeting was very good. Dovish comments and overall he answered the question straightforward. He didn't fumble on anything. There was nothing negative in the statements, and there was really nothing new. He pretty much said that he's going to continue with these low rates until we pick up and growth becomes more sustainable. And he does see some risks ahead. That's normal stuff. But two things he said today, which were very important, because Fed speak is something that a lot of, like I said, half jokingly, not jokingly, okay, that 96% of Americans out there don't even have a frigging idea when they listen to a Fed speaker what they're saying. I'm talking educated people in the business. I remember back in my days on Wall Street, and these guys would be looking and say, "What did he say?" They would have to go to the internal research director or economist to say, "Hey, what did you exactly mean by that?" Well, what he meant is really simple. He's going to keep it going. Low rates, keep on buying U.S. Treasury bonds, keep on buying mortgage bonds. If things get really bad, he's going to pump in more money by buying asset-backed securities, maybe more corporate bonds. Okay? And so it was great. Two things he said. One, that the housing market is not overheated. That's a relief, because if he said the housing market was overheated and that question was asked, then I can assure you that that housing stocks and which has a lot of others related supply sectors in the market would be dropping, and we'd be down a lot, at least on the Dow, where most of his housing stocks and the other material stocks are. But he said, no, it's not out. They asked him about the market, and he gave the most market-friendly stock-friendly answer that you could ever hear. You know what he said? They asked him, are stocks overpriced? He said, given the interest rates out there, the broader interest rates, let's take, for example, the 10-year government bond, which is still at 0.92%. It's not even over 1%. Given the extreme low rates and the extreme low rates that the Federal Reserve intends to keep for a very long time, that stock prices are a function of interest rates and the premiums and basically the premiums they're given. In other words, stock prices can still go higher because interest rates are so low and companies can borrow money very cheaply. Debt service is extremely low, both on the federal level and on the private sector, which is the stock, private companies and public companies. They can borrow at very cheap rates, sometimes next to nothing. So companies are cash rich. They're taking on debt, hopefully using it the right way. So from a standpoint of whether stock prices are very, that's what the reporter wanted him to say, basically. A bunch of idiots, most of them, okay? They wanted to trip him up. But no, he said the markets overall are fine. Because given the rate of the very low level of interest rates and the lowest level, I repeat again, that he's going to keep, that the valuation factor in the market is not too high. That doesn't mean some individual stocks are not nuts. I mean, that's a different story. That's just part of the stock market. So the fact is, that was a fantastic answer. And that's why after the market, just initially being down about 110 points or so, right after the thing, turned around and went higher. I'm talking the broader market. So that's what you need. That's your economics lesson 101, actually much higher than that, okay? In simplified manner without getting too detailed. That's not my job. All right, now we talk shop. 15th of the month, I always told you, you've heard me say it forever, including the last webinars, that when you come to the middle of the month, you generally have, and while I'm talking, I'm just going to flip through charts so it doesn't look like the same screen. Middle of the month, you always have a pullback. We got a pullback. I look at my last, you guys are in the market, you should know. We were down 5 days in a row in the overall broader market in the S&P 500, and a pretty ugly opening on Monday. All right, that freaked a lot of you out. So we're crossing over the bridge now, over the 15th. Today was the 16th. Tomorrow's going to be the 17th. So generally speaking, once you cross the hump in the middle of the month, and on top of that, this is monthly options expiration Friday. That's why we had such humongous rallies, both on the Dow rotating into the NASDAQ. And the NASDAQ is where the money's going now hard. So generally, net bullish. There's your Dow Jones Industrial Average, okay, which I put out there. And some of you care to look at these charts that I construct. This one I just constructed today. This is the Dow Jones Industrial Average. There's nothing really wrong in there. That was your high. Pull back hard on 1 second. What is it? See, what day was the 14th? 14th. This should be the 14th. Yeah, there was the 14th. That was your Monday. That was your Monday. Like, hey, welcome back to the market, guys. Crash, flash crash. Try to keep you kids all calm. Stay selective. Blah blah blah. Not feeling good. Myself too. Like, what? And look where we are today. Okay. Almost kissed the highs again this morning. This was your Monday. Welcome back to the lion's den. Get those diapers ready. It's not funny anymore. You know what I'm saying? Because I've been going on and on about this volatility thing forever. It's time for many of you to really grow up. Because you can't keep on saying, I'm still learning. Because at one point, learning stops and action comes into play. You sit there and learn all day long. What does that do for you if you don't put it into action? So you've seen a lot of markets, even in the last couple of months. You've seen literal short-term bear markets, bull markets, crazy volatile markets, crazy intraday flash crashes. Seen it all. I'm talking about some of you new people who haven't been in the market long enough. So use this experience, okay, with the help of all these great charts and stuff that I produce. So we have the middle of the month, we have options expiration, and we got another crazy stuff coming, which is Tesla's addition to the S&P 100 and the 500. It doesn't mean it's going to, Tesla was a great winner. Told you guys to buy it when the stock was at 600, below 600, and it shot up to 650. It closed at 607 on Friday and went to 643. 36 points. Okay? Within a matter of 24 to 48 hours. What more can I give you? Yeah, I could give you Shopify, I gave you Amazon, gave you Netflix many times, gave you Square many times, and many other things. Many others that are just sleeping now. I'm going to move up when we go to the charts. I've gone through it before also. So basically, I'll just come to the charts because they're all there on the real-time Twitter feeds. I'm not going to waste my time, going, just repeating the same thing. There's your Dow Jones Industrial Average. So far, looks good. We got a range here. That's the lower end of the range. If you want to track the Dow as a broader index. Now that Tesla's going to be added. Oh, Tesla's getting added, and the deadline is Friday. So all these hundreds of index quant funds and regular index funds have to buy the stock, and they have been buying the stock. That's why it's still elevated over 600. That's the deadline, and it starts trading on the S&P 500 and the S&P 100 index, by the way. And from what I understand, that the SEC has said that everything has to be done by Friday. I don't know if they're going to come out and say, no, we're going to push it out, because a lot of stock is going to churn that day, because they haven't bought it all. Some of them don't even own Tesla. They just need to buy it because they track the index. Now, can somebody tell me, please, once Tesla gets into, Tesla is a very volatile stock. We know it, stating the obvious. Hey, JP, so once Tesla gets into the S&P 500 on the SPX, is the SPX going to be more volatile or less volatile? It's a simple question, so please answer.
More?
Yeah, more. Because
more volatile.
More volatile, exactly. So basically, it's going to be kind of fun. Because tactically, if we catch all these great levels and stuff that I show, I told you the markets would basically bounce off this level. This was this was the crash on Monday, and I had drawn this uptrend line and shown it to you guys, and look what the market did. I mean, these are really, you can make this up. This is not before the after the fact. This is before the fact. Yeah, I was myself too, and this has happened a lot. I told you this was going to be a W formation. Even drew it out for you kids, all right? And it's exactly that. Exactly to the point. Touch the uptrend line, this one. And you guys can do this too. You can draw these lines. It's fun, you know. When you draw a line, it's not going to come back and bite you. Draw, play around like kids do with coloring books. I'm serious. And that's how you really become more of a visual trader. So it hit exactly that and took off. Took off. This was 12 midnight. This is where the market started, right there. But you see what I'm talking about. A nice W pattern, which looks like it's going to retest, and that's just around the corner, the previous high. And of course, there's going to be some jostling once it hits those levels. Back and fill. I mean, that's standard procedure. We just don't want one of these immediate flash crashes because that destroys a lot of short-term premium. But again, looking at it from a standpoint of an tactical active trader who likes to think a little bit more robotically instead of diving in for the next colored diaper and DMing like crazy saying, oh my God, what's going on? Okay, is probably gives you another great opportunity that many of you might have missed of buying these lows. So if we crash, let's say 300 points tomorrow, and it hits this major support line, that's why it's in red, falls here, slips a little bit below, hits this line, well, don't cry, buy selectively or buy the indices. Because by that time, things would be, again, on a short-term basis, very oversold, and it's going to have a reflex bounce, whether you think or I think or somebody else, you know, what they think. That's just the way machines work. All right, so get used to it. Get used to it a little bit. So the key is that, like I was saying, so the S&P is going to be more volatile. So if you, at that point, these charts that I produce, these are the E-minis, which are the futures proxy for the S&P 500. I also show you the SPX and all that stuff, are going to become more valuable for money-making purposes, both on a short and intermediate and longer term basis. Because S&P being more volatile, that means price movements are going to be faster. Options are going to have a lot more implied volatility, delta, gamma, okay, and theta too, options decay. But the delta and the gamma and the alpha and whatever Greek the hell the Greeks are there in the options in the options components are all going to have higher numbers. In other words, the automated options makers are going to move them up faster. So in a way, I look at it as an opportunity. Some people will say, "Oh my God, look at the S&P now. It's now Elon's in there. You know, his one tweet can move the stock up like well, he doesn't really tweet that much anymore. They told him not to and be a good boy. So yeah, so I think it's good from a trading perspective. But again, at the same time, if you are just a price watching trader and more of an emotional trader, you're going to get whacked because the movements are going to be fast and furious, much more than now, and you got to watch the charts, your own and the ones that I produce. Otherwise, you're toast. I'm just letting you guys know going forward. Okay, letting you guys know. So this is your NASDAQ, the actual QQQ, not the NQ futures, NASDAQ futures. Another good looking chart. I explained it very clearly to all of you on Thursday and earlier that this gap was critical. Listen to Thursday's webinar. Those webinars are not there for me listening to. I hate my own voice. I actually just go through the webinar just to make sure I didn't say too many silly things. I just kind of fast forward and listen to it after it's done. But for you all, that's your blog you got to listen to, because then you're prepared. Then you don't ask me the same questions that I've already answered in that webinar. And you don't need to sit there and listen to 60 minutes, 75 minutes of me just going on all this thing. Just use the fast forward button. Okay? Just fast forward it. But get the quick summary of that so that you know what I predicted, because a lot of the times, stuff that I'm showing, what will happen, both on the downside and the upside, happened. Case in point, explained to you guys very thoroughly that this gap was critical. Here's your neckline, okay? And I'll do it again. Here's your W formation. Here's your first neckline, okay? Let's say N1, neckline 1. Here's your second neckline, N2, all drawn for you all. These are not automatically generated by the computer, okay? Or whatever platform that you use. This is N3, neckline 3. And these are all supply points where the big selling came in on Monday. And last week, actually, since the 9th. And this is pattern completion, which would be N4. And guess what? We blew through the pattern completion. And we're probably going to come back and retest it a little bit. Big deal. Now we are in these dotted lines here, which are the acceleration zones. And the acceleration zone goes up all the way up to somewhere around 311, possibly 312. It's quite a bit higher. It certainly can. If Apple goes to 130, and these big monsters, Amazon goes to 3,300, Netflix goes to 530, we're going to go to 311 in a heartbeat on the Qs. So all there, it's drawn, okay? I also explained to you that this gap was very critical, that if we're going to slide, we better hold this upper gap fill. And worst case scenario, you better hold this line here. This is not difficult. This is not difficult. If some of you, not in attendance, but some of you out there still don't get these charts, and if you have kids who are maybe 6, 7, 8 years old, or maybe 4 or 5, and again, I'm not insulting anybody, it's a fact. Show them this chart. I can assure you they'll sit you down and they will understand this better than you do, because this ain't hard. And they don't even have to draw it. They'll say that's where it's, they'll tell you whether it's bullish or bearish right there. Trust me. I asked a friend to do it, who's not even a trader. He wanted to learn about charts, and his kid taught him, just in simple kiddie stuff, how to read one of my charts. I am not kidding you. Exactly. So, saying all that, there's acceleration channels, you know what's going on. So this is your downside. Is it still in play? Not for now. Maybe in January that we could go all the way down here. Maybe. That's a lot. Okay, that's a lot. That's like saying Apple back to 115. All right, and every all these big monsters down 20, 30, 40, 50 points. So I don't even know that. All I know is I drew it, I showed it to you, I explained it to all of you, and it worked. This is not the first time. So let's all this out, get this out. Let's get this. Here's your cup. It's a W pattern plus a cup. I drew that, drew the handles, blew through the handles. That's very powerful. That's very powerful. That's why the NASDAQ performs so well. And it's not just text, it's biotechs included. So showed you that, the Qs, showed you this is your intraday little step-by-step, how, where markets can fall. I was looking for the markets to fall, probably 36.78. Here's your red line. We do not want it to go below that, obviously, because then it'll plummet real fast and another flash crash might develop. A lot of the time, flash crashes intraday develop for no other reasons other than the pressure of selling, and then the hedge funds pile in on the short side, and then you get the stop limits going off. Okay, the stops going off. Then you get panic retail traders. So you mix in all that together, and then you get a waterfall decline, which culminates in a very large candle, generally around 3 p.m. Because by that time, the margin clerks are saying, that's it. Well, the day trading firms, which you basically get people to pay them money to day trade at their firms, there's a lot of them. They're like, that's it. You can't hold anything overnight. But I'm just down a little bit. Doesn't matter. That's house rules. Sell. So you get this boom. And the market makers love it. And the shorts love it. And you could play these. You could play these. Like, you don't need me. The lines break, go, sell, buy puts, so whatever you want to do. But as people who basically have these pre-planned roadmaps drawn, to me, these are great buying opportunities. Great buying opportunities. This applies to stocks, which have short-term technically fallen, but very attractive entry points. And this applies to markets. So I covered that for you, S&P, covered the Dow for you, and that's it. That's enough of market, analysis and everything. So let's look at stocks.
Shopify.
And don't always look at stocks which have gone nuts and you made some money on. Also look at stocks, and this is something I want to teach all my traders. Also look at stocks that you've lost money on and now are in very attractive buying opportunities. Shopify looked like garbage, those options, because they had 2 days to expiration left. Shopify, when it fell 60, 70 points, looked like garbage. So all of a sudden, people make money on Shopify, and they're just like, I'm in love with it. People should be in love with it. And I know many of you bought the lows, and I'm very happy about that. People should be in love with it when it was falling, and it looked like, I'm trying to get the freaking chart in here. Oh, right here, hiding in plain sight. That's your Shopify option. Yeah, so you should basically be overjoyed. I know it's kind of complete opposite to our mental neural network. You should be excited to buy a call that you're $8 and now it's down to 1 or 2 and it's reaching at levels where it's extremely oversold and you still have time for it to bounce. You should be happy to buy a lot down there instead of holding the mouse, not a real mouse, your computer mouse, okay, and basically saying, oh, should I? Because by the time you wait on those companies, they ain't going to give you a chance to buy it because they'll run it pre-market. They'll run it right after it opens up. And then you buy and boom, they drop it 10 points. That's the reality of trading, not the myth that you all might have been trained on or learned from the gurus that you learned from. That's the reality of algorithmic high frequency trading, black box computer driven markets. Okay, that's the reality. Not the, oh, look at the price. Oh, look at the volume. Oh, look, it's on a major uptrend. Bullshit. That uptrend can be demolished intraday in an hour, and within the next hour, it turns around, or the next day turns around and rips the head off the shorts. So please, get over that old myth that, oh, price and volume dictates. Oh, it's in a real uptrend. Nah. Uptrends can only be detected through technical patterns, and a stock is basically either breaking out to new highs or coming off some significant technical bottoms with a great risk, low risk, high reward ratio, like big commerce. Okay, exactly. But then people don't look at that. They want to keep on chasing Shopify, which still looks pretty damn good. And that's your Shopify call, the December 24th, 1200s, which is not even this week, it's next week. That's why I kept on buying those calls cheaper, because it's not expiring on Friday. So original calls were bought, I believe it was like $10 or $11. They went to 2. Then they went to 25. You had, and this is since last Wednesday. You had Thursday, Friday, and Monday, and Tuesday to just nibble and keep on lowering your cost, because you had no idea that this was going to happen and the stock would be up $86 on no news, just the way it fell on no news. So if you had a cost basis of, let's say, 10 and it went to 2, you could have lowered your cost basis down to almost $3 or $4 because they were so goddamn cheap. You could have bought it as low as $2.15 right there. This happens a lot, kids. So get used to dollar cost averaging, whether you like it or not, because that's how you make the real money. It's not a guarantee it's going to happen every time. It's a pretty good probability that if the chart, which we're going to look at right now, which was getting creamed and they were moving it $10, $20 literally in minutes, as you all know, not the first time. They do that with these big cap stocks like for fun. And these machines can do it because they're working in millions, 1/1,000,000th of a second. Does that mean there's some bad news? No, they're just frigging day trading. So get used to that idea, because many of you have still not accepted the idea of a completely robotic market that our markets are. And of course, there's many stocks which are not robotic, which is driven by retail traders. But I'm talking the big ones, the mechanical ones. You think me and you move Apple? That's a joke. So accept the idea, submit to the algos, okay? Submission to the machines, and then you're gonna beat them. Try to fight them, you're gonna lose. You can never fight them. They're too fast, too quick, too volatile, too erratic. So forget that price and volume crap. All right, let's look at this chart here. So look at the volatility. Let's look at it from Monday the 4th, beginning of December. Monday. This is Monday of this week. So stocks here. Okay. So stocks closes at the close with a price on the right. Okay. Right there. Closes at $150, 1,050. Bang! Runs up to 1,100. Okay. First opens up and runs gap. What's it called? Gap up and gap and run. I forgot the term. Gap and go. Sorry, gap and go. So big candle, pulls back a little bit, and then ends the day. And then ends the day at where did it end the day? Ends the day at 1083. Looks great. Bang, moves up the next morning, gaps open, runs again around 10:30, 11. Like I said, between 10:30 and 11, you always get profit taking. Literally always get profit taking. Just rule of the thumb. So for different reasons. One, the European markets are closing around 11, I believe, between 11 and 12. So you have big machines, hedge funds from Europe running their programs and profit taking. So, and then and I think that's one of the main reasons why between 10:30 and 11 we always see some profit taking. Once the European markets close and get out of the way, then our markets take over. So you got and then comes the flash crash on Wednesday. This was last Wednesday. The stock is doing fine, and the next thing you know, bang, it just crashes from 1106 down here. However, here's your big support level, and I've shown this chart and the other Shopify chart, which I'm going to bring in because we're talking about that stock right now. Where is it? Oh, here. And this is all on the Twitter feed. And another very helpful pointer for all of you, which I've mentioned many times. Don't ask me for a chart, which I put out there. It's on the Twitter feed. Either take your time scrolling down or screenshot the original chart that I put out there. So this way, when I'm not that busy, sure, I'll put out the updated chart or whatever, which I always do anyway. I'm talking the original chart so you know where the action really began. Screenshot it. How many of you listening to me right now, Chris, Dominic, JP, Mike, and answer honestly. Don't worry, I won't bite, all right? I'm only here to help. and buy you all nice fluffy diapers. All right. How many of you screenshot and have a file where you save the charts that that you're either trading or not trading, or you want to trade, whatever? And be honest, who doesn't do it?
All the time I do it.
Okay, Chris, do you do it?
I save them on my phone once in a while, but my phone's kind of small.
Okay, doesn't count. If you need to save it on the phone, that's fine, but you got to save it somewhere. JP, do you do it?
Yes.
There you go. No wonder JP's nailing so many good trades. Do it. Create a folder if you're on the desktop, or on the phone. It's easier. Create a folder and just shove it in there. Because iPhones are damn good screens. You got to have a big screen, and Samsungs too. Remember, I don't call them Samsung. I call them Samdung. So, and if you have one, burn it and buy an iPhone. So, basically, yeah, just save it in folders. Then you can open it up. Just enlarge it. See, okay, this is what it looked like, and then you can see the difference between that and what it's doing now. So this is your actual chart of Shopify from one of my platforms that I use. This is your intraday trading chart, massive volatility. Even these little candles are 10 points, 15 points. So don't let this screen here fool you. These little things can hit your options fast. It's just the way it goes, right? Each of these candles. If I enlarge this, for example, you had a lot of heartbreaks, a lot of chances to buy it cheap, a lot of like, oh my God, this doesn't look good. Okay? Despite and rumors. They run rumors. The news services run rumors. Oh, Amazon executives discussed creating a Shopify competitor. First of all, read up on the companies. What Shopify does, Amazon can't even replicate. And I'll give you a quick reason why. Shopify actually with permission, they actually own their customer data. They don't steal it. It's part of their agreement. And they have software which basically goes through that. So they know their customers and their clients much better than Amazon ever does. Amazon cannot own my data. Okay? So there are some fundamental differences, and read up on it. So they're cool. And the next thing you know, Shopify falls 40 bucks. Boom. But what? If Amazon releases a Shopify type thing, all of a sudden Shopify is going to disappear? Shopify's growth rate is at 50%. Amazon's growing at maybe 15%. Yes, Shopify from a valuation standpoint is more expensive, but so are every high growth company. They have a lot less shares to trade than Amazon. That $3,243 monster, you and me ain't moving that stock. Okay? We're just little minnows riding the backs of the whales, okay? Exactly. So this is your, I use the 15-minute, the 1 hour to get a good idea on what's going on. Candle structure is very important. That's a very bullish flag. And we're going to look to see where Shopify can go going forward. So here's the quad one, which basically is much cleaner to understand. What a beautiful chart construction. No question about it. I'll give myself a pat on the back. No question about it. And you guys should all pat yourself in the back if you actually understood what this chart was telling you. So basically, we had a 1016 is your, and this is just from the 10th of December, is the major floor. All the stock was really doing was moving in a trading range, wide trading range, mind you, wide trading range. Those calls ain't cheap. So if you bought something at 12, it'll probably be at 5. Don't cry. Look at the chart. It's been, I'll show you the longer term chart too, that it broke out of a major trading range exactly since August, September. I'm just showing you like what happened in the month of December. So basically what this chart helps me do is it keeps me, when you look at it, it's very geometric. The far more geometric and pattern friendly than if I'm looking on Thinkorswim or other things. It's not wiggly. It's either straight line up, straight line down. It's the same chart, same price variables, everything. But look how different it looks. So upper end of this range was 1107. See you later. That's the one it took out today. And I kept on showing you the internals, which were still climbing higher. There was an ascending triangle right there. There was an ascending triangle. And you know I've been hot on this stock for a while now. Not for years, but at least for the last couple of weeks, last couple of months. So there's your ascending triangle. That was your Amazon flash crash, like boo, whoa. It's scary, trust me, okay? But now you know. And the machines and the hedge funds did a great job. They bought, not all of them. All the hedge funds are just like you and me, okay? All of us. They're all trying to eat each other, for fast profits. Some of them have faster moving machines. Some of them are smarter algos they're running. So it's not like every hedge fund's a thing. And most hedge funds actually are really stupid. That's why they trail the market. You guys can read up on it at your own time. But they're fast though. So when this is happening, they're jamming. Sell it. The news media runs the news. Oh, Amazon might be getting into Shopify's territory. That's what they do all the time. And when it goes up like that, they don't tell you anything. They don't tell you anything. Did you hear Shopify at least once on the media today? On any of the financial media, whether it's Bloomberg, whether it's Fox Financial News or CNBC, did anyone hear anything about Shopify?
No.
Exactly. I made my point. Pure manipulation. And I love it when they don't talk about it. I don't want them to talk about any of my stocks till we own a nice amount and let them talk about it and let it run. The more they talk about a stock that we own, the more riskier that stock is getting, and the algos will punch you in the face if you're not careful. Because people love to move in herds. Look at StockTwits. Look at all the great other talky, chatty trading communities. They're all talking about the same stocks most of the time. Nothing wrong with it. Herds can drive stocks higher. We've seen that. But if you're setting up a swing setup like this, you want to do it quietly, like a ninja, coming through the darkness. All right? Buying the calls, sitting there, doing whatever is necessary, managing your position accordingly, feeling like garbage on certain days. Those are the days you really want to lower your average cost basis. Okay? You don't want to hear them chatting about like chirpy little Tweety birds all over. Okay? And that's why I don't chat much on StockTwits at all. Because most of them are a bunch of idiots. I go there for information, by the way. A lot of the time, some great info there. So I'll check and see, and then somebody will post a good article or some news that came out. But the rest of the people, garbage. Most of the thing, they're swearing at each other. They're calling each other names like you don't want to even like, and I'm not some like little pussycat, all right? But seriously, they're like kids, drunken kids, pissing on the floor. Most of the time, arguing with each other about things. Like, come on, just throw out charts. Let me just see the charts. And most of the charts are garbage, by the way. No offense, man. Some of them, fantastic. Most of them, like, what? I could just show you a naked chart of the S&P going higher and say, oh, markets are going higher, as if you guys would really make money through this volatile market. That's really what it's out there, most of the forums. So I'd rather do it like that, okay? Do it like this. Quietly, stick with our community, and take the tough decisions that needed. So this is your short-term chart. This is the 1 hour chart or Shopify. And it's certainly, these lines were drawn before, not after the fact. So it's really getting really overbought on a short-term basis. So for it to drop down, let's say, even as low as 1125, like losing 30 points, no big deal. As long as it holds 1115 and 1120. As long as it holds that, then you're going to see the next bounce. But right now, the slow stochastics are telling me they want to move sideways. That's a very big positive. The MACD histograms are moving higher, and the short and the fast stochastics, the STOC, is still overbought and moving higher, showing underlying strong relative strength. So all that is good. I'm not seeing like a crossover down and the stock going higher, because that's called the negative divergence, because at one point the price has to catch up if it, of these internal indicators, that's called a negative divergence, start to come down. But I'm not seeing that yet, not even on the hourly, which is great for traders. So that says that the 1200 to 1220 range is very doable. The other thing that I like about Shopify, and I explained this to you guys a while ago, is that the options are very elastic, price elastic. It simply means that the options move very fast with a $1 to $2 or $3 move on the stock. Look, we bought the December 24th, 1200 calls when the stock was at in this range, average range, like 1070, 1060, sometimes lower. In fact, when it was around 1040, when we were doing most of our buying, okay, I said buy the 1200 calls. So that's $160 out of the money. Yet the options move ferociously, and today showed the lion's share of the move. Like the stock is not even at 1200. It's at 1160 after hours. And we have the 1200 calls when the stock was at between 1040 and 1060. So you buy something $140 out of the money, and it still moves up from $6 to $9 to $12 to $15, and bang. I don't find that type of elasticity, that type of implied volatility, that type of options, call option, in this case we're doing call options correlation with a large high price stock like Shopify. Did you guys understand what I said? Because this is very important for all of you guys to understand. If somebody didn't understand, then just let me know. You all did. Okay, good. So let's look at it on a let's look at this on the weekly, which I've shown before, and we're going to revisit it again. One of my reasons, people ask me, why were you that on the stock? Well, number one, it's a great company. But number two is I noticed that because original buy on Shopify that we took staggered profits along the way was down here, was in the 870 to 875 range. I remember seeing the stock back in late October, or was it early November, down like $50 one day, because I love buying these stocks, but I do not want to pay up crazy premiums. So I shy away from it. I look for some sort of technical condition, especially on the oversold side, to say, okay, that's when I'm going to get in. I do that a lot. I'm doing that with big commerce. We're going to look at it. I'm doing that with on a short-term basis, some high momentum stock when they get sold off, like which worked out fantastic today, almost a double. Snowflake. Okay, SNOW. I did that partly. It wasn't that oversold, but it was oversold. With Datadog, when the stock was at 90 and the stock today hit 107, even though I sold out yesterday around 105. That was also almost another double, somewhere between 80 to 90%. So that's my style, all right? Some of you just want to chase the hot ones, which is fine, but get ready to get burned too, very fast, very fast. And there's nothing wrong with momentum trading, but you better be quick on your feet, because the machines will destroy you. So you gotta be glued to your screen. And by the way, as I'm showing all this stuff, please feel free to ask any question. Another reason I liked it when I told you guys that, but here's this great company, holiday season, online shopping monster beast, and the stock was well off its highs. No longer. Now it created a new high. So when it was down here, I said, listen, this is at least, and you can listen to my previous webinars, from like a couple of weeks ago. I said, it has to go retest its highs. That's almost a given. And more importantly, it was, oh, this is the weekly, sorry. So there's your daily. I'll make sure that you guys can see the screen. Okay, so it wasn't, and it was down here. It wasn't even at its 50-day moving average. Just away with Amazon. I don't have time to go through all of them tonight because it's going to be like long, and some people don't want to be listening to like an hour and a half of every single analysis, every stock. What did I say about Amazon on my last webinar and also previously? Can somebody remember one very important point I said about Amazon about why the stock will go higher? And please, come on, no one remembers? I said that a couple of times.
50-day.
Exactly. Thank you very much, Mr. Pester. Who's that, JP?
Yeah.
All right. Exactly. I said this stock is below the 50-day moving average. So forget everything. You're a monster like this in holiday season. They're keeping it down below the 50-day? No longer. That 50-day, and that's why I bought the calls way out there, the 3240s. That today alone went up 225%, but you could have made more if you know, when they dropped Amazon the other day on the European bullshit, regulatory bullshit. So basically, yeah, the 50-day. So that was another attraction on my part. Like this, they're definitely manipulating the stock. Amazon below 50-day, this one below 50-day. Like, what's going on here? In the meantime, they're running the crowd stocks well above 5 standard deviations above the 50-day. And they're keeping these suppressed. Okay. So now you see the results of that. So this is what Chris was talking about. This is what I mentioned to you guys the other day too. All these internals are fine. All right, so I'm not gonna even bother expanding it. I'll just expand one of them. It hasn't even got into overbought levels yet. It's just crossing over. So basically what we have here, let me make this full screen there. We have a major multi-month range breakout. So now a lot of latecomers, and I bet your butt you're going to have some analysts coming out and saying within the next couple of days, oh, we're upgrading Shopify to 1400. Some of them have already done that, but I'm talking the lemmings. So now it's on a technical radar of some large mutual funds also who never do the incisive, detailed technical analysis like we do. Really, they don't. They just look, oh, it just broke a range. Oh, so why would they not buying the stock here? Why weren't they buying it here? Like when we tell people to buy. And these guys are running billions of dollars. They look at simple stuff. Oh, it's above the 50-day. Let's go buy it. Oh, it just crossed the 100-day. Let's go buy it. Trust me, I know. My first job was at Putnam Investments in Boston. I learned a lot. Their technical analysis in majority of the cases is so simplistic, you guys can teach them. I'm talking about the large institutions, specifically the mutual funds. They're the worst at technical analysis. Small shops, some hedge funds, some great technical analysts like Tony Dwyer, Katie Stockton, these great names, these great people. They're good. They look at a lot of stuff. A lot of small houses look at a lot of good stuff, but not the big ones. So now they're all excited. It's on their radar. IBD is like, ooh, Shopify. All right. So is it too late? I don't think so. The big money's already been made. And let's see what it does. So here's your range, and that range goes from all the way from August, right there. The stock was trading in a very wide range, and that wide range was on the upper end of the scale. It was 1130 to be exact, because I'm taking this point and this point. Yeah, let's call it 1130. And the lower end of the range was 840. So that's 300 points, right? Roughly. Yeah, 300 points, roughly. So now that range, so that's the first month all the way down November. Now we're in December. So we got 5 months almost of a wide trading range. That's a very wide trading range of 300 points. But from a macro standpoint, looking out, we just broke out of a 300-point trading range. That's 300 points, by the way, for traders. Lots of good opportunities. Buy the lower end of the range, sell, and then deal with the fake news and all the garbage that's spewed out there, dropping the stock. But it always came to the lower end of the range and bounced. So now we are out of it. So if you add 300 to 1145, you arrive at 1445. So can this stock go to 1445? Is it going to happen just like, $80 a day every day? Of course not. But can it happen as early as sometime in January? Sure. Basically, the stock wants to go to 1600 on a longer term basis. I've shown this before. On a short term basis, we got 1215 to 1220. We got another line here, which is 1324. So some 1220 to 1300 is doable. So what I did today, so again, 1220 to 1300 is doable. All right. Expect $10, $15, $20 pullbacks real fast, like in minutes. That's standard procedure. So get used to that. If you're not, please don't trade the stock. Please don't trade the stock. If you're slow, if you're not watching it, or if you're just buying it, then don't watch it. Just leave it there. Buy it like a month out. Don't go like heavy 3 months out and all that crap. All right. Just go a month out. Pay a decently expensive premium, not outrageously expensive. If you buy it 3 months out. All right. You probably pay $70 for a call. That's $100 out. Does it make sense? Yeah, maybe. Not for me. All right. I don't want to put one call and say $7,000 locked into that. Nope. Sorry. So basically, 1300 is doable, and 1220, 1225. Major range breakout, probably a follow through towards 1200 before they pull it back again. So very nice chart, explosive volume, all that good stuff. And looking out ahead into next year, $1,600 stock, in my opinion. Along the way, of course, you got 1337, you got 1400, 1500. So what I did was I wanted to do a little test, and I said, listen, let me look at the ones which are 1300. The calls at 1300, not even the 1200 calls. You're talking 1300. That's 100, again, another 140 points from here. Right? Remember, we bought it at 1060, 1200. Original calls were when the stock was at 1060, and I bought the 1200 calls. So original entry, I'm going to call it E1, was when the stock was, well, the original entry was actually 900 or something. But I'm just saying we bought, on average, the stock was around 1060. So we bought the calls with a strike of $140. Are you guys with me so far?
Yep.
Got it.
Yeah, this is the reality of trading. Okay, not making up like sweet, lovely stories so everyone's going to be happy and go to bed like smiling. Oh, great, I have that. You got to be. This is the reality of it. This is how scary it can get. This is how things can reward yourself, and that's trading. If you don't know how to handle your emotions, please, please, please do not be a trader. I listened to one of my young guys that I've been training, and the poor guy yesterday was just like, "Oh my God, I can't believe I did this." I felt so sorry for him. I said, "Listen, stop trading. Stop trading." I said, "Stop trading for a week. Just follow what we're doing, or just don't look at the Twitter feed." It's totally brain wet. Wait, stop. He took a $3,000 account up to $30,000 and brought it down to 3 or less than that. Now, part of it is not his fault, the volatility and stuff, but that's too much. So what's the biggest mistake he did? You think he did? He went from 3,000 to almost 30,000 and brought it back to less than 3,000. What do you think was the biggest mistake he did from a trading standpoint? I'm not asking about emotional stuff.
Bought too much the first time.
Thank you very much. Not the first time, the second time. See, you buy it, you bought the first, and then he got the big wave, right? Then he got greedy. So in these 2 or 3 big heavy-duty monsters, and I told him, you got to keep, again, I'm not somebody's broker. They can do what the hell they want. They want to burn the house down. Hey, go do it, okay? So always have a lot of cash on the side. Buy one call of these monsters. If you buy one call at $10 and it drops to 6 within minutes, you've done $400 right there. So imagine if you bought 4. So let's say you put $4,000, you'd be down, to $2,400 within minutes. So stick with 1 or 2 calls. He didn't. He got greedy. And he admits it. Hopefully he learns from it. Amazon was the one that, Shopify was another one. And in panic, he sold instead of cost averaging. How do you think he's feeling today? He's feeling like that this market, it just hates him. That's what traders tell me. Oh, this is what I do, and this market is always watching me. Yeah, they're really watching you, as if the market gives a shit who we are. As if the robots know who we are. Well, they do know in the herd mentality. When the packs run together, they know what those clusters of calls and puts are, and that's where they send in the JDAMs to take out, whether it be on the bullish side or the call side or the put side. That the market knows. But individually, because everybody's thinking the same way. Oh, I tell people straight out, you're not that special. What's so special about you? You're trading with $1 billion, then the market will know you as Mr. Whale. I don't think the market's watching us, okay? It's only because most people are doing the same thing. That's why they will hit at that, at that juncture. Anyway, let's get back to it. So I really wish this kid luck, and he's still training, so I'm sure, he's going to come back strong. I certainly want him to. All right. So the calls where strike prices were 1,200. So basically $140 out. So now we just showed you 140. This looks like a 4. $140 out. So now the stock is at 1160. Let's say somebody's starting off, said, "Oh, I missed it all. Let me try to get in on this range," which you certainly can, in my opinion. So you look at now we are at 1160 exactly. Remember, stocks love to move in 100-point ranges, just like the S&P and other indices. So now we're looking at the 1300. And there is the chart of the 1300. And I was amazed that these things move like this. In fact, they move bigger than the 1200s, even though they were way out in price. That's what I'm saying is this option elasticity and the options Greeks on Shopify are really exciting. In other words, they are trader friendly. They are not like the Regeneron frigging options with the spread a mile wide, or so many others of them, especially on the biotech side with a mile wide, or even some of the big cap things. They're like a $3 spread. Like what? But they move. So here is here, if you want to look at it from the beginning of the month, the calls were at 9. This is when the stock was like a lot cheaper, obviously. So it's 9. You had a couple, points where you could have traded for like 2 points, whatever, and then the big Amazon's going to eat me alive garbage fake news crash. Okay, it's not actually fake news. Amazon does discuss on that, but so what? So and then they just kept on losing premium because there's 1,300 calls. The strike, they went to 40 cents. The high for today was 6.5. I wasn't in them, so I'm just showing you an example that these things still have juice. So 6.5 divided by 40, that's a 1,600. Yeah, 1,625% move since yesterday. And this is when the stock yesterday on Shopify was how much? Yesterday it closed at 1074. 1074, 1,300. With that much out of the money, the calls move 1,625 points to the highs of the day at one point. So these are the ones one should be looking at. Well, not, yeah, because 24th December, I thought for a minute they were 18th December. I'm like, no way. Even though I'd be wrong. They probably run the stock another $70 on Friday. I'm serious. They do that. And OPEX day. I've seen Apple calls. We've caught a bunch of them. Go from like 20 cents to like $3. People are like, wow, well, why don't you buy a couple? So these are the ones we should be looking at, all right? The 1,300 calls. Now, if you say, no, I'm not gonna bet that, I want to come a little bit closer, then look at the 1,200 calls or the 1,240. It all depends on how much you want to pay up for it. But these ones at $4, buy a couple. If they go down, you're not crying out in the woodshed, okay? At least you can dollar cost average. Let's say you buy them at 4, 4.5, they go down to $1. Okay, you can buy a little bit more. You buy them at 14, they go down to $1. Like I explained, most people will never even touch it. In fact, that's where you should buy at least 1 or 2 to lower your cost basis down. All right, let's take a look at, let's clean this out. I think enough of Shopify. So same chart, I don't want to go into too much. That's Big C. We started to see, this was this. Is it on this chart? Let me see. Yes. Okay, so I love patterns like this. We did well when the stock ran up to 85 because that was the neckline and it backed off, and I still can't point a finger as to why they had that sudden pullback on the 9th last week. There was no negative news they presented. It's all hedge fund activity, period. All right, but there must have been something else there. Maybe there was some insider selling. I don't know. All I know, I sold a bunch at 85 and the rest of it, which wasn't a lot because they were so cheap. So I cost averaged it down. And they basically, some days they tried to go higher, but it slipped out of the box. So let's look at a longer term picture of this. It's very simple to read. This is a real company. Again, please read up on it, who these guys are. This is not a biotech one-trick pony, all right? These guys are real. I've explained all this, like what the monsters did. They run Facebook. They're the software enablers for Shopify, for Facebook's Instagram shop. So you're talking real deal. So this is what I like. Yes, we might slip a little bit here. I don't know. And if we do, I'm buying more. Calls are cheap, reasonably cheap. I believe the stock gets back and retests the neckline. It can happen in one day, or it can take 6 or 7 trading days. Okay, it's up to you. I like this fact that it's oversold and starting to turn. The slow stochastics are oversold, but can slip a little bit lower. I don't know, but I can start to see a turn. Once this starts turning, and this is the fast stochastics turning, this stock is a tech stock after all. It is a very sophisticated enabler of online shopping software side. They create the systems. So don't be surprised you get bang, one of these $20 type of moves out of the blue. This move happened and we caught a whole bunch in the middle is because when Facebook said we're going to bring you in to run Instagram shops. So don't be surprised. All right, go ahead. Quick question. I'm going to move on from Big C. Go ahead.
Yeah, that all the e-commerce stocks were just wild today. Everything was up. And,
yeah, partly, yeah, exactly, but not to that degree. Okay, Etsy's been up, fantastic, but the Amazon, of course, it's a seasonal factor, but I like to look at the ones which where the options can really deliver a bang for the buck. Yes, you're right. It's e-commerce season, and online, it's going to be a great online season again. So I agree with you. Which other comes to mind that you were looking at, JP?
Me?
Yeah. Did anyone particular that come
Oh,
in mind? Like, no.
well, as far as charts that I like, Shopify was the best. That was what I was focused on all day.
Okay.
I think Adobe, they're all going to get their turn, and
Yeah.
I like Adobe.
Absolutely. Well, Adobe is an institutional favorite, so I'll certainly go with that. I'm looking at a lot of the smaller names which are not talked about as much. Datadog still looks good. Today it basically hit back there. This one, if you look at it on a daily basis, this stock has a lot of room to move, and the upper end of the room is 118. The calls are cheap, and you can see what's going on here. That's Datadog. Okay, another cloud company. And let me take these lines out so you guys can see. There we go. There's your high. Looking pretty damn good. So please, we did well with this. And it certainly is it's on a pretty significant uptrend. Here's your range, a large range, 80. Well, I'm not even going to call this a range, but bottom line is I think the stock goes to 118. Really simple as that. You got to be patient, but it moves like $2, $3, $4. Not bad. Let's look at the ones I have here on my screen. Amazon. Okay. So what's the Amazon story? This is my daily trading chart. This is the one that I trade off each of these lines. Looking fantastic. Okay. There. This was your drop on the European regulatory attack. Bang. When the stock opened up, looking good, and bang, they just take it down they took it down like $50 in 1 hour. Great, right? But there's your gap fill. There's your gap fill. Yeah, that was upper gap fill. It hit exactly that. So I'm looking at it. I just see the candles develop. I told you guys to buy. Told you guys to buy. Exactly. Some of you did. Some of you didn't. Well, good luck to you. But it's a very definitive chart. You can see it. A chart cannot be so symmetrical unless machines are running it. No question about it. Look at this. It's almost like a triple bottom. Go up, create another head and shoulder. Go up. So now 32.50, they're probably going to try to pin it at that level for options expiration this Friday. So we have to look out a little bit more. Remember, there's option spinning going on a lot on monthly quad. So stock might have the greatest news, but they just hold it up maybe $5 or $6. In the case of Amazon, that's nothing. That's peanuts. Today it was up 80 or 78. So they do that. So be careful about it. And let me get that. Let me get this. Let's take a look. And this is the exciting part. This is your daily. Okay. And this is on the quad system, not on Thinkorswim. So Amazon, let's clean this out a little bit so you guys can see it. That's your pivot. There we go. Now, I will tell you the political risk of the idiots from Washington going after Amazon is not something you just sneeze away. They're going after Amazon. They're going after Facebook. So don't just sneeze it away because the Dems are totally in cahoots with the Republicans and each of them have their own reasons why they hate these companies. All right. Some of them political reasons, mostly in my opinion. And so they got an axe to grind. All right. So technicals or no technicals, just let's be careful about that. Okay. Here we go. So basically, just on a pure technical basis, what I do is I look for the supply points where they came in and sold the stock. Hold up. That's where these lines are coming from. So you got 32.93, which is pretty nice, 55 points from here. That could happen by Friday. It can happen by Friday, by the way. Then you got the other next supply point where the sellers came in, the machines came in. That's 33.66. You got a downtrend line here that intersects at 33.68, which is pretty nice. 33.68 is 100 points higher. Do we have time to do that by the month end? Maybe, yeah, I think so. Then you got the upper end of the picture levels, which is 3,500, 3,600. I don't think that happens by December, by end of this month. I think that the best we can get out of Amazon, the most bullish case scenario is another 100 points higher from here. But first, it's going to hit a roadblock at 3,300. They're probably going to, play around with it a little bit, 20, 30 points down, which is nothing, right? But it's a good-looking chart. Slow stochastics is just turning, not even close to being overbought. Fast stochastics, which are basically measuring movements on an intraday basis, very overbought. Can it reset all the way down here? It sure can. Can happen within a couple of hours during the day. That's why I love these quad charts. These things are money makers, not the stock itself. I'm talking just following these indicators. So that's your Amazon story. Netflix. Netflix is basically a completely range trading, short-term, trade the candle stock. That's it. It's a trade the candle stock. If somebody tells me Netflix is going to be up to 500, and this is a level where the stock hit some major resistance right here, $560 by next week, I'll say bullshit. Maybe I'll eat my own words, but hey, I don't care. I mean, that's a lot. But if you trade it as a trader should, within a range, well, trade the candles. So far, looking good. There's a gap fill here at 525. These lines not drawn by me; these are automatically generated. The R3 or resistance 3 is 535. Can it bust a move all the way here on some great news? Sure, it can. Internals are totally fine. If you want to trade it intraday, I use the 15-minute. That's a beautiful, easy on the eye trading chart. Candles start turning, you buy it. You can flip it within 15 minutes. It's a 15-minute chart. And this one looks pretty damn good. Here. There's your range. And there's your range, which goes up to 530, 535 for this week. Next one. Gonna start winding down here. Apple. So this is Apple's 1-hour chart, which is great for traders who want to manage their trades during the week, during the day. It's great. So Apple got overbought. Apple pulled back a little bit. Now it's creating a flag. That means we have room to, there's your pivot. What we don't want the stock to do is break below 126 on a large red candle. In that case, you're going to hit a previous gap. That's where the dotted line is here. You could hit 126. What we don't want the stock to do is break 126.60. And Apple calls it cheap, so they lose value, very quickly. But so far, it's okay. But it moved. 5% move in Apple is not a joke. It needs to rest a little bit, but again, monthly options expiration, you might get a push up towards 130 real fast. That's your bull flag. And it all matches in. So the bull flag is basically saying we shouldn't go below 120, 126.40 or so. Looks great. Short-term trading. Long-term trading. Daily. And this is just showing you off a slightly different platform. So instead of, so where can Apple go? So Apple basically can go back to its highs. It's really as simple as that. There's no rocket science analysis needed here. This is the big sell zone. So it's going to find a lot of trapped sellers, buyers who basically held on from the crash in September. So they'll be selling. So, but Apple, like I said, you trade Apple. What happened in Apple yesterday, $5 is not normal. Apple generally moves anywhere from 1 to 3. So cheap calls, be patient. It looks pretty damn good. I would say that 132.76, which is the upper R3 here is 133, 134 is doable between now and the end of the month. So that's, yeah, so little ones that one should keep an eye on. This one's a beast, by the way. This is AI. And I told you, I showed you guys some options that you choose to buy or whatever. I think the stock goes to 124 real fast. This is the IPO, all right? It's a nice falling wedge, serious company, very serious company. Read up on it. Not many companies do what they do. This is not in a crowded field, in other words. So I can see the stock hitting 124. Showed you the calls today. The 130 calls were $9. This is for January 15th, by the way, because they only do monthly options. They just started trading the options a couple of days ago. And the January 140s are 670. So do whatever you need to do. So I like this one. I think this one's on the move up after they ran it up and brought it down to 22. I think it's good for 28. No options yet. I'm looking at it. I have the common. I kept on nibbling a little bit. Didn't buy exactly at the bottom, but my last cost average was here, and I'm pretty happy with it because now I'm almost, I'm actually even and higher. No, I'm higher. Just, I want to put this stock away. Read up on it. Pubmatic, what they do. No, they're not an English pub, serving you nice Guinness. All right. This is a serious tech company. Programmatic trading, programmatic advertising. So please look up on it. What's the other one that I put out there? Or I will do it. TTD.
Velodyne.
Which one?
Velodyne, Frank.
Teledyne?
I have, yeah, VLDR.
What? I know Teledyne. What's the symbol?
VLDR. You put it out yesterday, and then it dumped on that news. But it's a great company. I have it down on it.
Okay, let me see here. Let me find it. Oh, I'll look at it in a quick second. Airbnb. All right. So again, Airbnb. Wish I was down here. Bought around here. I think the stock can go. This chart is out there. Screenshot it. Do whatever you want with it. I think the stock can go to 145 real fast. 147. Apparently they're buying the crap of the 160 calls, according to Pete Najarian and whatever, unusual options activity. But I think the stock is in good shape. Holidays, people love to go. Airbnb business is going nuts. And screw the valuations. This is not a valuation play. This is just a play on what is happening now. So I personally think the stock is very tradable. I'm very happy that the options weren't super expensive. And I like it. The options were, they weren't cheap. I'm sorry, I was wrong. They are expensive. But buying one or two, that's the way to do it. Buy one, buy 11, sell it at 24. Hey, who cares? You made some money. Why do you have to buy 10? Why do you have to buy 6? Doesn't matter how much capital you're trading with, because that's when you get clobbered. Okay, so so this one is looking pretty good. Bull flag right there. And I think the stock gets up to 143 or so, and real fast. The fast moving stocks. So good looking chart. Screenshot it, keep it. Now let's take a look at what Chris is talking about. Teledyne. Love it when people. Okay, what's the symbol?
VLDR.
TLDR.
V is in Victor.
Oh.
Yeah, Velodyne LiDAR. Great company.
Hold on, what's the symbol?
V is in
Yeah,
Victor.
that's my thing. Okay, I heard Teledyne because of the phone connection, and I'm thinking, why is he talking about Teledyne? Yeah, Valdar still looks good. Valdar got a little bit hit on sympathy with because LiDAR technology is basically laser automated laser driving technology. LiDAR. It almost sounds like Ligar, like lion mixed in with the tiger. Liger, remember the liger? They're the real ligers. They're very big, right? They're huge. So it sounds like that. LiDAR. So anyway, so LiDAR technology. So news came out. News thrown out that Intel's using their Mobileye division, which they bought Mobileye 2 years ago. You guys remember, and not use LiDAR. Boom. Then you got a big hit on LAZR, which is what's it called? Luminar technology, which is another LiDAR heavyweight, right? Which was shorted by Citron. That went down like $3 or $4. Valdar got hit. It sounds like Star Wars. Hello, Valdar. Are you in town? Yes. So Valdar looks pretty good, but these options are very cheap. But get ready for intraday volatility of $1, $1.50, $2. But chart looks pretty good. These are companies which have great technology, no real earnings. So you get one bad analyst report, you can very easily fall $3 or $4, and the options get completely creamed. But it looks good. It looks good. So all right, guys, it's 10 o'clock. Again, I try to keep it short. Keeps on going, and keeps on going. Wow, hour and a half just goes when you're having fun with the boys, right? Let's show you my NIMO. Okay, NIMO. I talked about this quite a bit on Thursday. Explained it, how to read it. So I'm just going to walk you guys through it. What's going on without any explanations whatsoever. I'm just going to say what I'm seeing. I like. Starting to cross over up. This needs to start to turn, where I like it a lot more. We sold off minus 12 was on Thursday. On Friday. No, yesterday. Today it's 9.5. Whichever the case. RSI starting to turn. So if we get a real push, we could get overbought at around the mid Bollinger at 32. So whichever the case, net, it's okay. This should have looked a lot better today because this is the New York Stock Exchange McClellan Oscillator, and the Dow was down 45. So basically a bunch of New York Stock Exchange stocks, had some pressure. Boeing was down 250, things like that, $2.50. Caterpillar was down. I don't know why the stocks were down today. Can anyone tell me why the stocks were down? I mean, a Mohawk was down. Those are the things I look at. United Rentals as big industrials. Why were they down? Anyone know? Okay, I don't know. So there's no reason to be down. Or maybe some industrial production numbers came out. They were a little bit soft. Maybe that's why they were down. So that pressured it. Whichever the case, it's looking, it's starting to look good because once this crosses over, that's when you get that next surge towards the level that we talked about at the beginning of the session on the S&P and stuff. All right, guys, go spread the word. Tell them what we do. There's a lot of, I could do a session just showing options charts on the things I've suggested and where they've gone. And you know what? That would be nothing but just bragging about what we did. I try to help you guys by showing like what can we do going forward. DraftKings is another one that's just breaking out. And of course, the hedge funds will pull it back a little bit, try to keep it under 55. Whichever the case, it's a beauty. And the chart is out there on the real-time Twitter feed. So instead of just looking and say, oh, I told you to buy here, now it's 1,000% plus, and this is up, and now it's 500% plus. I'll leave it, some of the, I'll leave it, what we put out on the Twitter feed. I don't want to go through that on these on things. I just want to show you where we can do. So many of you who haven't had a chance to make any decent money lately because you're too scared, because that's exactly what fear is. All right. I suggest that you still have you still have some time. The market's not going anywhere, and the Federal Reserve has blessed us with the market, and don't let this fool you. That's all. Have a great evening. Spread the word, and please get some referrals. We had a couple of people all scared shit out of the market, drop out over the past couple of weeks. So let's get some new blood in. All right, let's do that. Thank you, and let's have a great trading day tomorrow. Good night. God bless.
Thanks, Frank.
Anytime. Bye-bye.